Good evening, one and all present here. Today we are going to discuss about the financial management under an overview of nature and function. Financial management. Financial management is broadly concerned with the acquisition and use of funds by the business firm. It refers to planning, acquiring, utilizing, and controlling of financial resources or activities. It deals with investment decision, financing decision, dividend decision, liquidity decision, budgetary control. According to R.C. Osborne, the financial function is a process of acquiring and utilizing funds by the business. So you have to how you can utilize the funds in the business. Under this objectives you have first one assessing capital needs, second determining capital structure, creation of effective financial policies, resources optimization. Under assessing capital needs, the financial manager need to evaluate the factors such as cost of current and fixed asset, cost of marketing, need for buffer capital, long-term operation and human resources cost, etc. Successful business have clearly defined short-term and long-term financial requirement projections in place. Determination of capital structure. A company's capital structure is a framework that determines decisions such as equity ratio as in short as well as a long term. Creation of effective financial policies. There is a need to frame efficient financial policies that govern cash control, the leading and borrowing the process. Resources optimization. Great financial managers are able to navigate through different scenarios by making optimized use of the available financial resources. This would reach the cash burn and increase the cash burn to generate the maximum return on investment. Next, we see the scope of financial management. Estimating financial requirements, deciding capital structure, selecting a source of finance, selecting a pattern of investment, poor cash management, implementing financial control, poor use of surpluses. Next, what are the goals in the financial management? Maximizing the profit, maximizing earning per share, shareholder wealth maximization. Under the profit maximization, main advantage is economic survival, measurement standard, social welfare, economic welfare. Disadvantages, assigning on the concept of profit, ignore the time value of money, ignore risk, ignore quality. Under the wealth, you have the time value of money, risk of uncertainty, effects of dividend policy on the market price of the shares. Next, steps for achieving the objectives of wealth maximization. Increase in profit, reduction in cost, source of fund, minimize risk, long run value, good track or record of dividend payment. Next, under the wealth maximization carries out business entry, competition, bargaining process of buyers, bargaining power of suppliers, competition among competitors, under the competitive advantage, cost advantage, differentiates advantage. Next, we see the difference between the profit and wealth. It does take into an account time value of money. It does into an account time value of money. It does not take into the consideration of the uncertainty. It takes into the account of risk. It does not consider the effect of dividend policy on market. It does in the account the effect of dividend policy on market price. It does not differentiate between the short term and long term. It considers the different strategies for the long term and short term. Next, fundamental principles of finance. Under this, you have the investors, shareholders, lenders, the business proposal. Next, decision, return, risk, and the market value and scope of financial management. First one, capital budgeting decision, capital structure decision, dividend decision, working capital decision. Next, decisions or scope is investment, financing, dividend, liquidity. Then it comes under the investing decision. You have the short term, in the long term under the long term decision. Financing, it comes under the project sources, short term and long term, owners fund, external funds. Dividend decision is the distribution of dividend. Then it comes under the earnings of dividend. Then liquidity and working capital. It is a clerical scope of financial management. It shows both the liabilities and assets and expenses in short-term securities, receivables, cash in hand, etc. for the accounting year. Then emerging role of the financial manager in India, liberalization, globalization, technology development, violate financial prices, economic uncertainty, tax law changes, ethical concern, various financial dealings, short-term activisms. Then financial manager in India, investing planning and resources, financial structure, merging acquisition restructuring, working capital management, performance management, risk management, corporate governance. And a finance function, main it also directed by the financial resources to generate the profit to determine the productivity of the business. Then functions under the finance, liquidity, investment, dividend, and finance. Then what are the determining the financial needs? Selective source of funds, financial analysis, cost volume, profit analysis, capital budgeting management, profit planning, and control. Thank you.